So today we're going to be assessing the level of tech's influence in finance. And I think what we've really been discussing together before the session is what the future influence is going to be, and maybe draw some parallels of what we've seen before and understand where the future is going to go. Today, as the digital revolution really moves at pace, we need to be fluid enough to embrace these changes. In an industry built around reducing risk, reliance on technology brings some interesting questions and unprecedented opportunities, I think, but we need to understand these challenges as a sector and navigate them successfully. So that's kind of just the introduction to the panel. Now I'm going to get to understand our panelists a bit further. I'm Doug Mackenzie. I am the head of content and programming over at the Fintech Fringe Festival, and I've been filming banks around the world for the last eight years. So without further ado, I'd like to introduce the rest of our panel. So we've got Alicia and Ngomo, Vice President and Head of Visa Consulting. Alicia, how are you doing? Could you please tell our audience as well a bit more about yourself and your role?
Of course. Hopefully you can hear me, guys. So I'm actually an LBS alum, MBA 2011. It was great to be here at the time, and it's fantastic to be here back to talk to you. As Daf was saying, I lead Visa Consulting and Analytics, which is a consulting business of Visa for all those countries, UK, Ireland, France, Belgium, and Luxembourg. But apart from that, I wear a second hat within the organization. I'm the lead for artificial intelligence for Europe. So hopefully I can provide some insights on how that field is going.
I'm sure you will be able to. I mean, I think artificial intelligence is going to be a key theme of today's events. Now, also joining us here today is Sir Andrew Likierman. I'm sure a lot of you are fully aware of him, but Sir Andrew, could you please tell us a bit more about yourself and what you've been working on recently?
Thanks very much. First of all, great to see a number of people back here. Lovely to see you back. In terms of this panel, the relevant bits are that I've been working since I stepped down as Dean on human judgment. And in this context, my interest is to say, what's the relationship between human beings and machines in the application of technology? So that's what I'll be focusing on in this panel. I come with a little bit of background here because I've been on the boards of 3 banks, the Central Bank, the Bank of England, Barclays Bank, and I'm now on the board of a startup bank. And so I've seen quite a lot about the development of technology over the last few years. Happy to talk about that.
Absolutely amazing. Thank you so much. And getting that perspective from the institutional side of things and the startup side of things, it's going to be absolutely incredible seeing those 2 parallels. So thank you very much. And also joining us here today, we have Callan Carvey, the Global Head of Operations at Cleo. Callan, thank you so much for joining us too. Could you please tell us a bit more about yourself and Cleo?
Sure. So yes, my name is Callan. I'm also an MBA, MBA 2020, and excited to be here today. It's not even yet my alumni reunion, so I'm very welcome. I'm excited to be crashing it. But I am the Global Head of Operations of Cleo. Our actual name is Cleo AI, and we joke that we've been named that since 2017, so we're a little bit ahead of the game. And Cleo is a fintech created to help users improve their financial lives. So it's an AI assistant or a chatbot that is meant to help young people improve their financial lives. So savings, budgeting, short-term lending, and credit building. And that's all powered both from the consumer perspective through AI as well as our lending and our payments business as well. So kind of both the B2B side of AI as well and machine learning as well as our consumer facing. As the head of operations, I oversee our compliance, our customer service, our partnerships, our credit card operations, and anything else that needs doing.
I mean, that's absolutely incredible, and operations is such a key part of running an organization in finance, and especially one so factored around AI, so I'm so happy to get your perspectives on today's panel. And that Think Ahead series panel, that's really part of this Festival of Minds, we really want to kind of understand and give practical tips to what the future is going to be looking like. But it's not just about us, it's about you as well. And I'd like to offer you guys a chance to put some questions through over Slido. So if you do have any questions for the panel, please submit your questions using the Slido app, and you can scan the QR code that we'll have on the screen. So without further ado, I think we were talking before we all jumped on this panel on how to set the scene and how to really understand what role technology is going to have when it comes to interacting in finance. To understand that, we need to understand what the human element is and what humans do within finance. And Andrew, I've got to come to you for this. What exactly are humans good for? or good at when it comes to financial technology?
Okay, let's just start with a question. How many people here are really happy with the service they get from their bank? Okay, a minority. And congratulations on getting good service from the bank. I asked the question because that is relevant to the issue of what are human beings good at. In general, we like a bit of interaction with human beings. I mean, we may be a bit old-fashioned in such things, but you know, the human interaction is important in finance as in everything else. So just to set the scene, as you say, so for me, what I've been looking at is the question of, okay, so what differentiates a machine and a human being? You may think this is a pretty esoteric question, but it isn't. Because if machines can be as good as human beings, then clearly the future lies with the machine. As the machine gets more and more sophisticated, the question is, what is left for the human being to do? And that's a question that affects all of us in many different aspects of what we do. So, a couple of propositions. Number one, there is absolutely no doubt that technology is going to continue to make huge inroads, huge impact on finance in all its aspects. There's no question at all about that. You know, we can see where it's going, and you can see from the increasing sophistication of what is currently available that you don't need to go very much further to say, actually, it's good at doing a number of things that currently human beings do. And that seems pretty clear. So no question at all about that. But then the question rises, okay, so what is the machine not going to be able to do? And I won't be able to remember this, so forgive me if I read out a list. I've spent quite a lot of time working on this. So here we go. Are you ready? Okay. What machines don't have? They don't have consciousness, intentionality, a sense of context, meaning, conscience, ethics, self-belief through aspiration or ambition, an ability to develop social bonds involving feeling and emotion, trust, loyalty, and empathy. They can't anticipate spontaneity, idiosyncrasy, contextual shifts, and fallibility. They're not good at interpreting random interactions, fluidity, and nuance. They cannot think abstractly. They cannot cope easily with ambiguity and incompleteness, including the confusion of correlation with causation. There will be no exam on that list, just to be completely clear about that. Why I'm reading that out is because, I've done quite a lot of thinking about the question, all right, so what is the machine going to be able to do and what is the machine not going to be able to do? And that does seem to be relevant, because if a forest of hands had gone up on human beings interacting happily with financial institutions, I wouldn't be talking quite in this way. The fact is, as human beings, we do demand things that don't necessarily come from machines, some of which I've just read out now. And for organizations, they cannot rely entirely on machines to do all this stuff. And I speak as someone who's involved in a startup where everything has been digital from day one, no legacy systems at all. So I think there is the challenge. We have fantastic opportunities, but we also have to combine the machine and the human being.
See, that's a really interesting approach, and just having that nuanced ability of going, okay, it doesn't have to all be one. It doesn't have to be just in one direction, and to apply that and take elements where it is needed, because there's no point in innovating for innovation's sake, right? So to that end, Alicia, I'm going to come to you now and ask, what role does technology play in financial services currently, and what should it be playing realistically?
I mean, the role of technology, especially international information technology in financial services, has been tremendous, and it has been for decades now. I think we all understand that the efficiency that we've been seeing in financial services, from transaction processing to self-serving, our ability to self-serve relies completely on technology capability. Customer experiences, insights on customers that allow us to tailor products and things like that is all technology. Accessibility, another one. Remote areas are being served with mobile sort of networks in UPI and other rails in India. Accessibility, financial inclusion, a lot of that has been done through technology. Innovation altogether, talk wallets, talk crypto, talk all these things. So I think the role of technology as an enabler, and I think that links very much with what Andrew was talking about, as an enabler will continue. We will rely on it to continue to increase efficiency, increase good experiences, and all of this. Now, and I'm going to talk about a bit about AI because that's my thing.
Please do.
If we think about for Gen AI, especially Gen AI, because AI, I will say, has existed for a long time, despite all the novelty that seems to be around that. It's becoming the most impactful on how humans and machines interact. It's completely disrupting how we interact with technology as human beings. In that, it's probably one of the most disruptive innovations. If you think about the internet and what it did to financial services, smartphones and what it did to financial services, Gen AI is probably the next one. So, answer your question, what technology is doing today is enabling. I do still believe that what technology needs to continue doing for us is enabling, and there has to be a role, again, for the human in how to use it and to use it safely and to make sure that it is serving us rather than the other way around. But that's what I see for technology. It's going to continue to be a big enabler of financial services and of innovation in financial services.
I completely agree. The thought that fintech has been created to ultimately bring financial products that were typically for a very few to the many. You see PIX being taken up by almost half of Brazil within a couple of months. It's fascinating to see. And what you've seen with the recent ChatGPT, the fact that it can now help blind people move about and understand what is being shown on a screen, just shows what can really happen on the accessibility front. But one thing that's been really important on this element is bringing in wealth management to the people that previously weren't very good at looking after their finances, and the people that maybe hadn't had the opportunity to have a wealth manager before. So this is where, Callan, I've got to come to you, because we've got to find out a bit more about the fact that you've been utilizing AI since, you said, 2017. What's that journey been like?
Yeah, and I think I can break it down into, we use it, so it's Cleo, as I mentioned, is an AI financial assistant, and so we refer to her as a she. She talks to you like a friend, and using AI and leveraging some open AI models and some of our proprietary models and a few other open source models, we've built an AI that is meant to look at all of your transaction information. So we connect to your bank account using Plaid, and then that powers our transaction understanding. So if she's doing her job, she's looking at the inflows and outflows, and she's creating dynamic situations for you. So the budget that I get is not going to be the budget that Andrew gets. It's going to really talk to him and say, hey, you're spending more than you earn. Hey, you're about to incur a bank fee. Hey, you are kind of like cut back on Starbucks. We'll do this dynamically for you. We'll make this very engaging. And it should really live and breathe with your actual behaviors. So it's not static in the sense of that it is what it is day one when you set it up. It should evolve as your financial experience evolves with the company. So if you're paying your subscriptions on time, if you are paying your rent on time, we will kind of ingest all this information, and then that changes kind of the advice and information that we're giving you. But then on the back end of that, that also changes our strategy. So we're a subscription business and we're a lending business. So we use all of this information to also make sure that our lending strategy is dynamic. So we do two things. The amount of money you're eligible for changes over time. So exactly like I said, if we can see that you're paying your subscription on time, you're engaging with budget, you're engaging with savings and habits, we will change your eligibility amount and you will increase your kind of lending capacity over time. But we're also a subscription business, and we often serve, I would say, more of a subprime demographic and a younger demographic who's often unaware of their financial mistakes or the things that they might be incurring. So we do not take a subscription and we do not take a lending repayment if you don't have the money in your account. So we know when your money is getting paid, when your rent is being paid, and when you're likely to be able to afford that subscription or that loan. And so not only are we kind of like training you and helping you do this through all of these models, we're also protecting you, because we're not going to, our kind of motto is that we're not going to make money by you doing poorly with your money. So there's no late fees, there's no predatory elements or fees associated with this. It's a subscription-based service. So, and that also helps our business, because failed transactions cost money, arrears are not good for the business. So if we can both use these models to both help bolster our lending capacity, but also make sure that these users are actually being helped, it's kind of a win-win scenario. And so in the last 2 years, we've seen massive improvements in our ability to both engage the chat and have it really be predictive, dynamic, and speaking to you about you, as well as massively improved our subscription and lending business. I think we grew 150% of our revenue last year as a result of a lot of this. So.
Incredible. I mean, it really does speak to this, if we all think of finance as being, the business of reducing risk and improving trust, the fact that you've managed to improve the trust with your customers and then also reduce their risk, and then on the same time done the same to your own books is absolutely fascinating. And do you think that's going to enhance in the future? Can we talk more about that balance between risk and trust? And do you think that all your customers just automatically trust Cleo? Is she immediately that kind of just people feel very comfortable talking to her?
Yeah, and I think we've seen that. I think our engagement in terms of what you typically see someone engaging with their bank or traditional financial technology application, I think we're about 4x to 5x the amount of time spent actually using the application.
Yeah.
So we're definitely seeing kind of growing user behavior change and trusting her more. I also think as you stick around and retention improves on the app and your lending capacity does grow, I think the trust that she is here to help you and grow with you is we're really earning that reputation, and that's what we're hearing from our users. And we're also trying to figure out, right, we can't roll out products and services to meet all of our needs of our users constantly. So for an AI assistant that's supposed to help you save on taxes, save on your mortgage, do debt consolidation, we can't spin these products up fast enough or in a safe enough manner. So we're also figuring out, okay, well, how do we use this technology to work with trusted partners to say, okay, it might not be Cleo that you need money in lending from. We actually can recommend a loan that's probably a higher dollar amount than our books can afford, but we think this is the right thing to do. And so kind of building that trust that we're not trying to hawk our own products at you necessarily. We're trying to serve products and services that actually meet their legitimate needs and therefore build more trust.
Amazing. Now, we are in such a heavily regulated industry, but we're not the only ones. And Andrew, you mentioned when we were in the green room talking a bit more about other industries and the kind of intersectionality between the technologies. And I believe you were bringing up a concept within the medical industry, right?
Yeah, absolutely. I mean, I thought about this and I brought along a book with me. Here's a book called Deep Medicine by Eric Topol. He's an American physician. And he has gone through all the things that we have wrong with us, can have wrong with us as human beings, and asked the question, is the machine better at doing this or the human being? And in a number of cases, the evidence seems to be absolutely clear. The machine is much better than the human being. Look at a skin issue. In general, folks, if you've got a skin issue, the machine is better than the doctor, okay? Says the evidence here. For a number of things, particularly which are complex, which are comorbid, you've got various things wrong with you, which are linked to psychological issues, frankly, a doctor is better. And going back to my theme of the combination of the two, his thesis, which I think is pretty powerful, is, well, actually, allowing machines to do a lot of things that scarce human beings can't do is a very good idea, because that then allows the doctors to spend more time with the patients discussing the things that really matter to the patients. So again, in terms of saying, is it AI or the doctors, the answer is no. It's both of them, and one enabling the other. And I think that's a pretty good model in terms of saying, so what can happen?
Yeah, amazing. I almost picture the robotic hand outstretched to the poor-skinned hand of the human. But we've heard these positive elements. It's improved trust. It's improved bank balances of Cleo's customers. But I think we can't just be talking in rosy images, right? Alicia, I've got to get your perspective on, there's got to be some huge fearful elements here. I'm not setting it up with a kind of closed question there, am I? Sorry, but I'd love to get the kind of maybe balanced discussion here, and there's more to discuss, right?
I mean, I normally like to talk about the positives and the use cases and all that's possible with artificial intelligence and any technological innovation, but it's not, it wouldn't be realistic to think that there's no risk associated to it. And we've had them with all sorts of technology innovation we've had so far, so cybersecurity, data privacy, job loss. I mean, even with the technology revolutions of the past, like the industrial revolution, we had people breaking the machines because that was a risk at that point. And we're going to go and continue to have those kinds of effects. One thing that I would say is all of that will continue. What is happening with these new technologies, and I'm again talking about artificial intelligence and Gen AI and all of these things, and the more digital even, the technology is also at the hand of the threat actors. So, I mean, one of the things that we talk a lot about in Visa is precisely that, is protecting, is how do you protect transactions, how do you protect the end customer. Because what we're seeing is that those threat actors are going up the chain. And as you put protections in the transaction to control fraud or to control authorization, etc., they're now moving into a more, when we talk the front of it is digital identity theft, digital twins, fake synthetic identities, to sort of come from the top of the funnel into the transaction, the financial services sort of. So again, all of these advances, all this innovation also fuels increased risk, and that's something that we need to manage. Again, the type of risk as well changes. So with Gen AI, for example, we have things, a lot of more misinformation, fakes, we have bias to the nth, because it allows it to do that. With agents operating on our name, things that potentially Andrew is talking about when he talks about the human and the role of the human is, what is the role of the human and what is the impact in society? That's not something that necessarily we've been forced to ask ourselves, and that's a risk. It's a risk about our own identity and how individuals are going to see themselves. And there's a huge impact as well on responsibility and accountability. So who is responsible for things that are done by agents on our name? So not to talk about the privacy impact. So there's a new type of risk coming up in a maximization of some risks that were there already. Not to say, and now with that gloomy sort of prospect, I still think, and I'm still a strong innovation and AI enthusiast, but all of these are things that we as a society and regulators, etc., need to work out if we're to actually reap the benefits of this.
Yeah, it's a fascinating, two-pronged argument in the fact that not only are the fraudsters, the bad actors, getting the better tools, it's then also the privacy element in terms of, even within your own systems, is exposing this data to these algorithms safer than potentially someone within an organization. And I'd love to maybe get your perspective, Callan, in terms of where this balance between data friction and privacy and also protections are going to go in the future. Is it always just going to be this constant tallying of tech versus tech going into the future?
Yeah, I think it's an interesting balance. I think we're seeing, we chatted about this morning, we're seeing there's a desire to kind of give everything to the technology and then have it be super automated, super responsive, tell you everything you need to know. But what we're seeing, I would say in two-prong, we're seeing a lot from our users that they still want to talk to a human. We have a CS team that is global, and we have been training the models to be able to self-solve a lot of repetitive problems. So repayment issues, subscription issues, you name it, and it can solve most of those problems, but what we've seen is that our CSAT hasn't improved. So people's actual experience with customer service isn't being improved by a rapidness and an easier self-solving mechanism, and diving in deeper to that, they just don't necessarily trust their information in that way, their data privacy that way. There's a whole number of things. So even though the machine can solve the problem, people still want to talk to a person. It's their money, it's the thing they're most fearful about. And so even though we're able to resolve the problems much faster, our first response time is doing really well, our cost to serve customer service is going down, people's desire to speak to someone to confirm that, no, that thing actually happened. I want a receipt, I want human confirmation that my transaction went through, that I'm not late on a payment. There's a whole number of things. And then on the flip side, as you were just mentioning, the machine's not always right. Like we pay a ton of people to annotate all of our responses from our AI chatbot because it's often getting things wrong, and that can't be solved by a machine looking at that as well. So it's getting data privacy things wrong, it's getting fraud information wrong, it's getting maybe your social security information could be jeopardized. There's a whole number of things, and so we have humans kind of quality assuring that and annotating all of the information to kind of make sure that we're doing right by people. So I think the technology on top of technology doesn't always work, and what we're finding is, yes, it's solving a lot, it's moving us faster, but in our case, the trust and the privacy and the data element is massively reinforced by actual individuals doing the work behind the scenes.
Yeah, and Alicia, I know you're a massive advocate for that human touch and the customer element, right?
I am, but I'm also going to say that, I don't know how many of you saw the latest ChatGPT 4.0 demos. And that's where it's going to start getting tricky. When you eventually are interacting with a chatbot, and when Callan is talking about talking to a person, you're not talking to a person, you're talking to what you think is a person on the other side of that
Correct.
chat and interaction channel. Now, how able is that agent or chat, and how human-like it is going to make a whole difference to whether people are comfortable talking to a robot that they feel like a person. So again, that's where the nuances start getting, and where the actions that we take in terms of, do we tell people that they're talking to a robot? Does that make a difference to people to know that they're talking to a robot if the interaction is exactly as the one they will have with a person? There's a number of things like that, again, I don't think anyone in this panel has the answer to, but those are questions that we're going to have to think about and try and solve in the future, because they are very much there around the corner.
I mean, ChatGPT's 4.0 is already out, but the full-on speech element and video element is coming out in a couple of weeks. And I struggled to notice when the robot was talking. And so once we get into that paradigm, it's just going to be absolutely incredible to see where we can go. But as with all elements of technology, they cost a lot of money. And so especially for financial institutions, that can sometimes be quite difficult. And Andrew, I'd love to get your perspective on this kind of, I think it's the phrase, friction in the system. What are the barriers? And I know you've been in an organization that's been digitally native from the beginning. Also imagine one that wasn't very digitally native at the beginning, but now, I'd love to understand what your perspective is when institutions are going at different paces and have different budgets.
Well, I think we can all see the issues here in terms of traditional institutions having to adapt. The bigger they are, the more cumbersome the mechanisms, the more difficult it is for them to, and we can see that happening when systems crash. They're trying to do things better and it doesn't get better. So in terms of, friction is a polite way of putting it. The fact is things go wrong and can go wrong quite a lot in terms of transitions. But I think in addition to that, we have things which are, to do with the role of the state, the role of society in terms of creating frictions. So you've got regulators saying, well, you can't just do this and this just because it's technologically okay, and it's right that we should be protected from the potential of things going wrong, because the technology goes wrong because somebody made a mistake on the programming, by making sure there's checks and balances there. So in terms of friction, it seems to me that there's going to be, and there should be, continuing friction in terms of the role of society more generally in relation to this. But also there will continue to be friction in terms of transitions. One other element too is, there's a lot of people who still find it difficult to use all this. You know what I mean? And they are recognized in terms of saying, well, actually, you can't just assume everybody can do the latest stuff, because you effectively disenfranchise them from certain kinds of services.
Yeah.
So, in that sense too, that has got to be taken into account. You can't just say, well, too bad, you don't have a bank account if you can't cope.
Yeah.
You know what I mean? I think there's issues there on that. So there's quite a lot of frictions in the system, but I don't think the frictions are the killer in here. You know what I mean? They are frictions, they're protections, and it's right there should be that. But that will not stop the underlying trends.
Yes, you bring up a brilliant point, because we have been focusing on artificial intelligence for a long time because it's so fascinating. But this element that we're getting to a point in fintech where people are being left behind and suddenly will be unable to even pay for items. The element of a cashless society, you only have to walk around parts of London and you see signs everywhere, we don't accept cash. And it's going to be interesting to see that balance between legislator, regulator, and tech to see where we land on that. Now, that was obviously, Andrew, you were bringing up the brilliant element of the friction of implementation, but also there's the balance that consumers have. We've kind of touched on briefly, but I'd like to explore a bit further, Callan, when it comes to the human confirmation of big life events. And how do we diagnose how much friction a customer wants in their interactions with the apps rather than implementation?
Yeah, and I think we've not solved that. I think we're constantly iterating with different flows and different automation and different things to try to understand. So you're eligible for say, a $100 short-term loan that we do we give it to you immediately? Do we want to make sure that you are actually actioning that and saying that that's what you want and setting up your repayment schedule? Or are we saying, you're eligible for it, we're going to send it to you immediately, and on our predictive technology, we're going to say we're going to take the repayment in 3 months' time, 3 weeks' time, whatever it is. And there's pros and cons to both, right? There's some users want no friction, they just want the machine. If the machine's benevolent, like we're trying to be, great, we trust that. With other people, it's like, absolutely not. I want to control when I'm getting sent money, when I'm repaying money, and what does that friction look like, and when do you allow users to pivot that? And so I think we've been playing along with a lot of different variations of this, and same thing with our credit card, right? You have credit card, you have statement payments, right? It's a federal, our credit cards in the US, and there has to be a statement date that is federally regulated. So everyone has the same statement date. We have to send it out, everyone wants that, but do you want to allow some people to pay earlier, to change the payment date? How do you want to create different friction to make sure that you feel in control as the user? And I don't think we've perfectly figured it out, but we definitely know that users want some control and the ability to kind of pivot and navigate that in different elements. And so we're constantly iterating with different onboarding flows and different repayment mechanisms and different kind of servicing notifications to make it feel that the user is in control, which they are. They can change things, but it's the constant update that makes them feel a bit more they're in the driver's seat, and there is the friction if they want to create it. Even if it's all happening quite seamlessly on the back end and it's not that full of friction, we make them feel like they're in control and give them the tools to actually be in control. But it's a constant information. I think we talk around just taking payments whenever we know you have the money. That makes sense. But you might be saving that money for something else. We don't know that you have another mortgage that you haven't linked to us or a subscription service you've just signed up for. So yes, you have the money, but is that our right to take it at that point in time? And how do we engage with your permission, the friction you actually want as an individual, and what's best for both the business and the consumer?
Well, you're quite lucky in the fact that a lot of fintech apps are often cited as being the apps that people are most comfortable in receiving notifications from, unlike some other retail ones or anything like that. And Alicia, I know this is something you're very passionate about. Could you tell us more about it as well from your perspective?
No, I was actually going to make a point because it's interesting to hear Callan say her experience with her product and customers, and put it in perspective of a study we did last year across the UK, consumer research. In which we were looking at the future of payments, and we asked them what matters. And one of the things that came very, very strongly was control, in the sense of I want to determine when things happen for me. So we came up with a term that was called a strategic friction, because it's not about creating friction for the sake of it. It's actually to make sure that the customer can create the friction that they need. So if somebody is trying to save, let's actually create friction so that they don't spend without wanting to. If somebody prefers to have things, have a question coming whenever they are going to buy something, let's allow them to do that, but it's a customer choice. So I think in the back of all that is that consumers are going to be a bit more able to decide what they do, in how many installments they pay, if they pay in installments or not, etc. And I'm going to say this because it was announced yesterday, but that's one of the things that a lot of our, Visa obviously, but a lot of our partners are looking at. How do we make it more flexible? How do we make sure that consumers can do that? So one thing that we announced yesterday, and if you see it online, you should take a look at it, is the Flex credential. So how can I have one single credential and sort of do pay, credit, or debit, or make installments, or with a click of a button, select what I want to do? I think that flexibility allows control on how you're using. So again, totally aligned to your point. That friction needs to be a choice at a given point in time. Amazing. For consumers.
Now, I just want to reaffirm to the audience, in about 5 minutes or so, we're going to start asking some of your questions. So if you've got one in mind, please do follow the Slido app and put it there. Now, Andrew, you mentioned at the beginning of the talk a bit more of judgment as a frontier for AI, and I think, as we are all human, we want to know that we're still going to have a part to play in this. And could you tell us a bit more about it, please?
Yeah. So look, my assumption is that when this revolution is going to carry on, there's absolutely no doubt in my mind about that. A lot of things that we now kind of take for granted as being done by human beings will not be done by human beings. They'll be done very efficiently by machines, and that's good because that's across the frontier. But coming back to the question of the role of judgment, so what I see, in essence, is that one of the things that human beings have to offer that the machine can't provide is this human judgment factor. And I just give you an example. I'm doing some work at the moment on the future of wealth management, all right? Wealth management is full of people who rely on some little bit of quite hazy knowledge, you know what I mean, and other people's research in order to decide where to invest money. Perhaps I'm not being a bit unfair, but there are a lot of people who are not very good at this, actually, and their record is not terribly good, and yet they are paid quite substantial fees. You know, you go into the offices are well appointed. You know, there's no question about it. Things look pretty good on the whole. And who's paying it for it? The customers are paying for it. It's very interesting that, you know, the regulator has now required that fees should be disclosed much more clearly. And those in the UK will know that St. James's Place has gone into some trouble as a result of that. Okay, so in this particular case, what we've got is, why can't you just use lots of great algorithms to do the stuff, you know, to do wealth management? Put it all into ETFs and put it all into trackers. You know what I mean? Why do you need hundreds of people sitting in buildings doing this kind of thing? And that seems to me a completely reasonable question. But actually, of course, the world is not completely predictable. The world is uncertain. And you do need people to decide not just when to buy shares, but when to sell them. You know, all the kinds of difficult things that people have got to decide in wealth management. You will need human beings to do that. And what they have got to offer is judgment. It is their ability to interpret context and say, what are we going to do today? You know, which is not the same as we would have done yesterday or last week, because the world has moved on. Yeah. So I see judgment as being really important in the future of financial services more generally. And it's, in essence, as in professions, it is what professionals have got to offer. What have you got to offer your people? It's your judgment. So that's why I'm interested in it.
I mean, it's absolutely fascinating. And there are so many brilliant parallels as well to AI, because an AI is only as good as the data that's provided with it. And if it's not provided the best quality of data, its judgment is going to be just as poor as someone that is not informed. Yeah. And Alicia, this is something that I think you have a lot of expertise on as well, in terms of, you know, how can we rely on algorithms when we don't have control over the data that is inputted?
I mean, data is becoming one of the most important things. I don't know if you guys have recently listened to Sam Altman, so he's the CEO of OpenAI, talking about how we need more data, and we don't have sufficient data, and we need to create data. I think there's going to be a lot of work done into creating synthetic data that allows us to have bigger models that can be trained with increasing amounts of data. There is, and I was talking to Andrew a minute before the session about how the key issue with a lot of our financial services clients and all that we work with is they don't have the data in order to do any play on this. You have to have that, and that's only the quality and the availability of data. But then there's the point around how do we use that data and how do we do it safely. So the point about privacy and about the algorithms being correctly, being transparent, being etc. So there's a lot of elements around the quality of data that are important here. And also making a point on the Andrew's point on judgment, I think this is all about the AI path and whether we are farther or closer to AGI, which is not something we're going to talk about in this session. But I think if we start looking at potentially 10, 15, 20 years ago, the world might be a very different place, and we would be talking about something very different sitting here. But I totally agree with Andrew that in the world today, and probably in the next few years that we're looking at, there's a strong element on the human judgment that shouldn't be lost, and that human in the loops kind of concept that Callan also talked about is fundamental in any design that we do in terms of how we use AI as organizations.
Amazing. And I think that leads us perfectly to the audience questions, because I think it's quite a stark reminder that we need to uphold the best duty of customer care in everything from the data that we input, from the judgments of our human employees and colleagues, and really then also, to Callan's point, also modifying what comes out of the artificial intelligence at the end, even if the judgment could be good.